February is Debt Awareness Month, and today Debt Busters has released its latest debt index tracking consumer financial trends since the pandemic, which includes how consumers have been dealing with the higher cost of living and higher interest rate situation. Well, to share their latest findings, I'm joined by Benay Sager. He's the Chief Operating Officer at Debt Busters. Thank you very much, Benay, for joining us. So what are some of the key findings that came out of the latest debt index?
Yeah, thanks for having me on the show. I think perhaps the starting point is always, talking about debt is a difficult subject. And what we've seen is the absolute resilience of the South African consumer in sort of wanting to deal with their debt. So we see about 53% increase in terms of inquiries made about debt counseling, about 130% increase in terms of consumers signing up to online debt management tools. So for us, that's an indication that consumers more than ever are serious about dealing with their debt. The second finding is that, the compounding effect of several years of lack of salary increases, as well as inflation, as well as interest rate increases, has now really come together in terms of the impact on the consumer. I'm not even including things like petrol increases and electricity, but what we are seeing is that almost 96% of all new debt counseling applicants come to us with a personal loan, indicating that consumers really need to supplement their income with loans because they're really they're in a difficult spot with all of those things going on. So, and the third thing is that,
No, do carry on.
And the third thing is the interest rate changes. So we had a period where interest rates went down in 2020, and now we're in a period where interest rates have been going up. We see that absolutely reflecting on the interest rate of the different types of loans consumers are coming to us with. In 2020, for example, the average bond interest rate was 8.3%. Now it's 10.8%. Doesn't sound like a big difference, but it's massive if you consider that most of these consumers had borrowed money for the first time in 2020 to own a home loan. And as you know, for the first several years of your home loan, you're paying essentially interest. So we're definitely seeing the impact of the increase in interest rates on consumers' budgets.
Yeah. So let's stick with the whole interest rate story. The Reserve Bank raising interest rates by 25 basis points last month, a lot better than those 75 basis point increases that they were instituting before, but still an increase nonetheless. Do you think South African consumers can take any more? Because it does sound as though there are a couple more, if not at least one more, on the horizon.
Yeah, that's the big question. I mean, I think it's really difficult for the consumers to shoulder more of this. And again, I think if this was happening in an environment where we didn't have inflation, we had, decent salary increases, the answer to that might have been different. But, my personal opinion and our view at Debt Busters from what we see is it's going to be really difficult for consumers to be able to service everything that they need to service from a debt perspective. Already we're seeing that, consumers need about 2/3 of their net income when they come to debt counseling. They need that to service their debt. And with as interest rate increases, that amount that they need to service their debt also increases because unfortunately, half of the debt, at least half, is coming from really high interest rate, on average 23% unsecured debt for consumers. So more increases will mean essentially less money in our pockets. And I think it's going to be really tough. To answer your question, I think it's going to be really tough for the consumers to shoulder one or two more of these increases.
Yeah, I just want you to unpack what you were discussing a little bit earlier about people having personal loans. So does that mean that borrowing is becoming quite important just for people to survive? And if that's the case, what's that also telling us about the banking system? Because, of course, you have the Consumer Protection Act, and you're supposed to ensure that you lend to people who can afford to be lent to.
Yeah, what we see is that definitely loans have become a lifeline for many consumers. In terms of, we did mention there's virtually every single applicant for debt counseling had a personal loan. There's about another 20% who had really short-term loans or payday loans, as we call them. And I mean, what this means is consumers really struggling to supplement their incomes, and it's become a lifeline. And what that is resulting in is, of course, increase in terms of the average debt levels of consumers. So it's not to say that the affordability checks are not done properly. However, what happens is that consumers may get into a rut and they see that this is the only way. And we definitely see what they're not tapping into is essentially exploring opportunities to reduce their expenses as opposed to increasing their income. And I think that's probably one of the main messages to leave consumers with. Often when we are short of money, we think, well, how do I increase my income, or how do I get more money to pay for it? And often that extra money with the loan is going to be far more expensive than any other means. So rather try to see what you can do to reduce your expenses on a monthly basis as opposed to adding more to your debt pile. And I think we tried on our website to give consumers the best tools to be able to do that.
Absolutely fantastic nugget of advice there. Thank you so much, Benay Sager. He's the Chief Operating Officer at Debt Busters.